me see if there is sound. Let me see if there is sound. There seems to be sound, video, everything that we need. Okay, I'm doing this video 7 p.m. a little bit late, but today I was busy with some other stuff. So let's see what is happening with Bitcoin. 3 hour. Well, the 3 hour doesn't look good. I opened a long position, but maybe I will need to close it because we are right now standing at the Tenkan-sen. I thought that we're going to recover, to pump up a little bit still, but the 3 hour is looking not very nice. 2 hour is turning down, 1 hour is going down, 45 minutes. Well, there is some hope here because the money flow is pretty much flat, but we don't know what is going to happen next. 30 minutes, well, it's also bearish. The 15 minute is more bullish here, with some very small divergence on the view up. I don't know. I saw this on the 3 minute that we have uneven butt cheek pattern. We have divergence. This is lower wall, this is higher high. Higher wall, sorry. So, but we're still coming down, so I don't know, maybe I have to be more patient, or maybe I should close this now. Maybe we should wait for this level to hold, if it holds, and then I think this cloud should serve as support. However, there is also possibility that we break it and dump down. Now, seeing the CVD, well, it's high. It's high. It may go down. I don't know. We're just on the lower Bollinger Band. We have here the Ichimoku cloud. It just doesn't look very bearish to me. Here we had a wall. Now CVD is recovering up. So let's see. Let's give it a chance. If not, then yeah. If not, then I'll be erect, but this is the risk. So here on the 3 minute we are going down. However, I want to wait for this wave. It might be the last one, and then we can pump. We should have some support here, at least from this cloud, and I hope we go up at least until 2600, because it's very possible to do so. We'll see. Okay, other than that, okay, I wanted to play ISPO crypto analysis, on-chain analysis. On the Exo chart, nothing interesting. So we're still trading above the daily view up. On the 4 hour, I guess we're below. Yeah, we're on the 4 hour, we're below the view up, but I think the daily is more important. And we can pretty much go up here or go down. We'll see. Well, I don't have a crystal ball. One thing that is bearish for me is that we are, we are rejecting from this trend line, and it seems that we are going lower from this trend line. So we had a higher wall here. This is lower wall. This is higher wall. Sorry, lower wall. Higher wall. I'm making this up. So this is higher. This is lower. So it's suggesting that trend is continuing lower. I'm very confused with this higher highs, lower walls. Bullshit. So on this indicator on the Google Trends, it is showing that the price already bottomed, because we had a wall at 26k here on May 12th, and this is like double top on the interest, which means actually bottom for Bitcoin. This is what it means. I'm not saying that it's true 100%, but this is what we're looking at. And price is now going, interest is going down, and price is going to consolidate sideways or up. Maybe there will be a new dump, but who knows? Who knows? Let's see the options. This is bullish. We have more calls than puts. Low volume for Thursday, really low volume. Now tomorrow is 24th of June, and we have this awesome expirations of open interest in the options. So these are not small expirations, but still the gap is quite huge. So now the max pain is at 29k. Well, if the market makers want to make money, they have to push the price up. If they don't want to make money, it will go sideways and even lower. But I think there is huge open interest expiring tomorrow, that the big players can move the market like they always do. But we'll see what happens. Gamma exposure index GEX is pretty much flat here, 30k. Yeah, it's minus 30k, but it's not too low. It was minus 50k. Now it resetted a little bit to the upside. We have some puts coming, which is interesting, which is suggesting a down move, but on the higher time frames we have more calls. So I don't know what's going to happen. This is mixed. Well, we have the vol index at 95 and index price at 20k. We might be closing the gap here. So if we want to close the gap, price is going lower, so that's not bullish. Well, we have some strange thing here happening, but other than that, this is completely flat. Tricky. It's definitely tricky. If we hold this Tenkan-sen, this cloud, we don't break it to the downside, there is room for a small scalp. I already have my scalp waiting for it, but yeah, we'll see what happens. There is definitely some opportunity, because we see there is divergence and momentum is diverging, price is going lower, so at some point we should have some upside. I hope it's after this wave, the small wave. This is what I can say. I am expecting move lower in the future, but I guess not now, not in the immediate future. I think we may still play a little bit the upside and then go down. So this indicator is bearish, by the way. We are crossing bears here. I don't know, maybe this was a stupid idea, this small short, and I have to close it when there is not much loss. But I still hope that there might be something here. Yeah, there might be something here with this Tenkan-sen. So let's see, let's wait more. Let me see if I have this Inspo Crypto on-chain analysis that I can show. So 21st of June is his last one, and I don't have it. Well, it seems that the video will be short because he's usually going about 30 minutes. Yes, it would be amazing if we hold this level. Let's see if we can hold it. There is a good chance. I mean, always this indicator has been very accurate and trustworthy. That's the reason I have opened a small scalp. But if we go to the middle line, 500 something, most probably I'll take it. I'll take it and see where the market is going next. Okay, let me see on YouTube if there is something worthwhile. Play some analysis. Yeah, I wanted to see Mike Maloney because he has very nice analysis. His analysis is not exactly short-term trading, but more the long-term picture. That's why I like him, because I don't have the
when we select energy, we're seeing that in April of 2021, 116%, 16.8, 117% inflation. Then it went down into the 80s. But so if you take May of 2021, 97% inflation. This May, 101 on top of it. This is year over year. It's on top of the 97% inflation. Everything that is produced requires energy. So this is the base. This is where the crude oil is being sold to refineries and so on. And as that works its way through the supply chain, it takes several months. So we are headed for several months of continuing inflation until the Fed breaks the economy.
At goldsilver.com, we have a price match guarantee, free shipping, and global storage options. Get the best-selling book, Guide to Investing in Gold and Silver, for free at goldsilver.com.
Hi, welcome to this video. I've got Adam Taggart with me once again. Adam, how are you doing?
I'm doing great, Mike. Pleasure to see you again. Let's dive into this today.
Okay, what do you got?
Well, all right. We are going to build off your theory of the whipsaw roller coaster crash here, Mike. Inflation, deflation. We got a lot to talk about today on inflation. So I want to start by reading a tweet that was just put out by the White House. With the biggest single driver of inflation being Putin's war against Ukraine, POTUS, that's the president of the United States, has taken action to blunt the impact of Putin's price hike for families. Now, Mike, I think you've got some data that proves these claims here to be maybe a tad bit disingenuous.
Yeah, well, I try to stay politically neutral when I can. I am not much for either party at this point, but it's interesting. Revisionist history is something that is very dangerous. And when you see this, it really, really says that there is something wrong in society. Whenever the powers that be, and it doesn't matter which side it's from, are trying to change, they're trying to give a whole different definition of what really happened. And so here we've got, when Biden took office, and then the American Rescue Plan signed into law. I believe that's the CARES Act. And we received all of those checks. Now, to be fair, we did receive a check under the Trump administration too. So both sides were doing this. But the inflation really came to haunt them from the Federal Reserve lowering interest rates, creating currency. And then you see Russia's invasion of the Ukraine in February of this year. And inflation hasn't really gone up that much since. What's your take on this?
Yeah, well, you mentioned the term revisionist history there, Mike. I think it's kind of rule number one in politics is to try to blame the other guy or anybody else, for your shortcomings here. And look, but Biden did create the, poor situation he inherited coming out of the pandemic. But that being said, the actions of the current administration have made things a lot worse in terms of, how high the inflation has got. And the proof for that is the chart right here in front of us, right? I mean, almost all of the 8.6% current inflation that we're dealing with right now was taken on before the war in the Ukraine broke out. So it's really hard, and I use the word disingenuous. I think it's really disingenuous to try to blame it all on the outbreak of that war. Now, for absolutely certain, that's exacerbating, these higher prices here. The supply chains have been disrupted. There are key commodities that are harder to procure these days. So I'm not trying to diminish that, but it is very clear from the data that you've just shown here, Mike. I think it was Milton Friedman, Mike, that said inflation is anywhere and everywhere a monetary phenomenon. And, we issued collectively between the monetary and the fiscal stimulus over $10 trillion worth of stimulus into the economy between the outbreak of the pandemic in mid 2020 all the way through mid 2021, and we are now reaping the whirlwind that we created there. So this was very predictable, and I can say that because guys like you and I, when that was going on, were saying this is going to have inflationary repercussions. It's going to come back to bite us. And that's exactly what we've seen here.
Yeah, and people don't realize that inflation happens. It's called the Cantillon effect. Richard Cantillon, a few hundred years ago, described this effect. When you create currency, it inflates the area that it is spent first into a bubble. And what we have seen is through open market operation, currency has been funneled into the markets and through low interest rates into real estate. It wasn't until we actually started creating checks and sending them to the public that we ended up seeing retail price inflation at the grocery store and the gas station and so on. And what we're seeing right now is part of that roller coaster crash that I've been talking about for years. The stock markets are down huge, and some individual stocks are down like 50, 60, 80, even a few 90%. Cryptocurrencies are crashing. So there's certain areas of the economy that are deflating hugely at the moment, while we have this 8.6% consumer inflation. But I think what I want to do here is show you some information that is from my own childhood, my own, growing up, and what I'm seeing in inflation. This is a taco stand that I used to go to. I think it was 62 or 63 was the first time that I was, right around when President Kennedy was assassinated. And it's not high quality food. These are deep fried tacos. It's
Busters.
Yeah, right. They open at 11, and there are already lines. When they open, there's like 6 different windows. It's a taco stand. There's a few inside, a few outside. when they open their windows, there's already lines. You're going to be standing there for 15 minutes to get a taco, and those lines stay there until 8 p.m. when they close. So this is an addictive taco stand that's been around since 1959. And what I noticed is, for some reason, this weekend I was going, God, I'd love some great Mexican food. And so I went to the Tito's website, and when I saw these prices, my jaw hit the floor. This taco, when I first started going there, was 15 cents. Now it's $4.15. This taco with cheese was 18 cents. I just could not believe I could go there with, when I became a teenager, prices had already started rising, but I could go there with a bunch of friends for $5 and all of us could eat. And now $25 is what it's going to take for me to eat there alone. The burritos are now $15. It's just crazy. A burrito that was under 50 cents before is now $15. And that leads us to the loss in purchasing power of the US dollar, consumer dollar in the US right here. And so this is from I'm surprised that the Federal Reserve shows this. This is from the inception of the Federal Reserve. This is the inflation of World War I. And then we have the roaring 20s and the deflation where the dollar gains purchasing power during the Great Depression. And then this constant inflation robbing. So this is, people see price. They think of inflation as prices going up, and they've got to stop thinking about it that way. It's the currency falling. It's the dollar falling, the yen falling, the British pound, the euro. They're all falling like they jumped out of an airplane. Gold is still in that airplane. It's still flying high. And that leads us to this next chart, which is the Consumer Price Index. And you can see it's going up, and this is that 8.6 annualized inflation report that we got last month. If you take last month times 12, you're at 8.6% annual inflation. And then, but it's the producer price inflation that is really, really important here, because this has to work its way. And so what I'm predicting right now is that we're going to see several more months of inflation until the Fed breaks the economy, because they're going to fight this until they cause a really bad stock market crash, real estate, whatever, banking crisis. They are going to keep fighting inflation and raising rates into the biggest bubbles that have ever been created in all of human history. This is a situation that has never happened before. We're in uncharted waters here. But the producer price index, I'll click back and forth on these charts. Look at how much that's gone up, and look at how much consumer price index has gone up. Now, for our viewers, the producer price index is broken down into different categories. And it starts with the commodity producers. So this is the base of everything. It's the companies that dig up the minerals, pump the oil, chop down the trees. Then that crude oil, that dirt has to be sold to refineries for crude oil, to refiners for the dirt that are going to make the iron and the copper and so on. And for the trees, they sell it to somebody that's going to produce lumber out of it. But then those producers sell it to a manufacturer that's going to create a part out of their iron or plastic that they've created. And then that part gets sold to the manufacturer of a good, who then sells it to a store, who then sells it to the consumer. So this is the supply chain that we've been talking about. It's a chain of a whole bunch of different businesses lined up in a row, and you can't get anything out of this end until it's gone through all those different steps. And when you look at what is happening early on in that supply chain, I went to the Bureau of Labor Statistics, and this is important for everybody to see. So the Bureau of Labor Statistics, this is their overall. And what you see here is April of 2021, we were at 59.2% annual inflation. And then it went down. And this is for the raw goods that go into all of the components. And then lately, we're back up at the 50% area year over year. Well, this is April and May of this year, and it's 52% on top of 59% and 57% of last year. This is annualized inflation. So this is huge. But look at what happens when we select energy. When we select energy, we're seeing that in April of 2021, 116%, 16.8, 117% inflation. Then it went down into the 80s. But so if you take May of 2021, 97% inflation. This May, 101 on top of it. This is year over year. It's on top of the 97% inflation. Everything that is produced requires energy. So this is the base. This is where the crude oil is being sold to refineries and so on. And as that works its way through the supply chain, it takes several months. So we are headed for several months of continuing inflation until the Fed breaks the economy. And that brings us back. So if you got any comments on all of that, how this piles up and it takes several months before it breaks the economy, when it does, we're going to go into this deflation, I believe, of retail goods, along, an economic crash, velocity slows down, prices fall, but we're already seeing the precursor of that in the assets deflating, the stock market and so on. So you got any comments on all of that?
Yeah, well, I think that's a really important warning, one that I've been trying to give to people as well, Mike, on my Wealthion channel, which is understandably people are so focused on inflation right now as the villain in the story because it's raging so hot, it's in our faces. We go to fill up at the gas pump, we go to the grocery store. Speaking of the gas pump, I'm going to provide a image here to your producer, Dan, to see if he can put up here. But it was tweeted out by Elon Musk just to show exactly how high diesel prices have been hit. But Dan, if you can put that up here, that'd be kind of fun for a second. But to Mike's larger point, I think it's really important that people keep their eye on where the puck is headed because of this high inflation. And that is the fact that there's sort of this saying, which is a truism, which is that high prices are the cure for higher prices. People begin to constrain their own demand because things just begin to get too unaffordable for them. And of course, right now we have the Fed out there in parallel, actively trying to bring demand down as well. So you have these two really big forces right now that are trying to pull demand down. And I think the odds are quite high that they are going to be successful in that. And the progression I just want to note here for folks is, so Mike, you were showing how the producer price index was skyrocketing even faster than the consumer price index, right?
Yes.
So that shows that companies are not being able to pass along all of the price increases that they're experiencing to the consumer. And because they can't, there's margin compression going on. And in fact, I just launched a really interesting interview today with Peter Bookvar about this exact topic. So as margins get compressed, the profits of companies get squeezed, right? So
yeah, and that's happening at the same time that Elizabeth Warren and people are trying to ban price gouging. So they're not making as much as they used to, but they're the greedy capitalists that are causing.
Right. They're getting vilified here, right? And who knows? They may get some punitive taxes or something labeled on there. But at the same time, that consumer demand is going to start coming down for the reasons I mentioned earlier. So their profits are already getting squeezed by higher input prices. They're going to get further squeezed by a reduced demand. And we're already seeing that at places like Walmart and Target, which are saying they've got a ton of excess inventory now because the demand didn't show up the way that they expected, right? So what that's going to result in is both lower stock prices, but just lower profits, which then translate into being able to afford fewer employees. And that's where I think the big shoe to drop in the story comes in, which is we could shift pretty quickly from this huge jobs glut that we keep hearing about into a jobs drought or a jobs recession, especially if we fall into an actual recession economically, which it looks like we're heading into. So the point here is these super high skyrocketing prices that we're looking at makes us all super worried about inflation. but it's the deflationary forces that may actually shape our destiny more in the coming year.
Right. And then the Fed and the world's central banks have all shown their hand over the last 20 years, and their answer, they've got two hammers, and when your only tool is a hammer, everything looks like a nail. And they've got interest rates and they've got currency creation. And I believe their reaction to this massive deflation that's coming after, I believe, several more months of inflation, a few more months, and then the Fed will break the economy, big crash, all of those layoffs. What is it? The government now thinks that they can just send everybody a check and there's going to be no consequences because it's Putin's fault.
Well, and at some point in the story, the real concern becomes, does the breaking point at the end of the day not become a financial one, and it becomes more of a social one, where you have such a huge percentage of the population that's so battered and bruised and abused by getting hit with a huge increase in the cost of living, then losing their jobs, and just getting whipsawed back and forth, and sort of always being the collateral damage of whichever policy decision is being made. You may get to a point sooner than later where the populace just says, we can't take this anymore.
Yeah. That might be a good thing. I'm just hoping that there's some day that comes along where the people get tired of the con job that is the modern monetary system of all debt-based currency. And we go back to some sort of money that does not rob them of their purchasing power and of their hard-earned savings.
That's a great point, Mike. That gets us to the theme of the meme of the day. Before we bring that up, though, just real quick, folks, if you enjoy this video, please hit the like button, subscribe to this channel, and follow Mike and Gold Silver on Twitter. So, Mike, I know this is one of your favorite memes. Why don't you pull it up here?
Well, here we've got Powell and Yellen at the Fed. There is no inflation, and is swimming in an ocean of currency, which is currently happening. And then you've got the lifeboat, gold and silver. I want to thank you, Adam, for helping me with this video. And
always a pleasure, Mike.
We'll see everybody later. Thanks.
At goldsilver.com, we have a price match guarantee, free shipping, and global storage.
Well, again, very very informative video. So it seems that we're just about to hold this, hopefully. Let's see, let's wait for it. Yeah, I mean, with this divergence, we should be at least coming back to 25, I guess, 24 something, at least. This is my hope, my hopium, my hopium. And we kissed just this pivot, so yeah, maybe we're going higher. Maybe we will dump over. Let's see. On the 15-minute, it looks bearish, although we have some rotation here on the momentum. Not too much really, but gives you the hopium. Okay, so that would be it from my side. I'm closing this stream. 35 minutes, I think it's normal. Have a nice evening. Evening.